All right, good evening. It's about 8 o'clock and it's time to start out. Welcome to all of you. I can see that more people are popping in, and I hope you all can hear and see me perfectly. My name is Hans. I do apologize for not being Liam tonight. He had a bit of a knee problem since he's an old man. I hope he doesn't hear this. So he had to go to the doctor, and I took over. I hope that is okay, and that we'll have a fine little night here. The program for tonight is we will have a look at the portfolios, how they have performed the last month and so far this year. It is quite satisfying, even though the market is a bit to the downside today. And we'll have a look at all the new features that have come in Mystockscanner. Liam have been working hard, and not all of them are extremely visible, but I'll go through them anyway. We'll have a bit of a look at the value chart, some of the changes that has happened there, and we will have a chat about what will come of new features at some point. Those of you that are free users of my stock scanner, those of you watching this from Facebook, will be logged off. I guess you get to hear about 80% of it, and then we go a bit more in details with some of the portfolios, maybe take a stock analysis or two in the last part, where those of you that are paying members of my stock scanner, listening to this from YouTube, you are still with us. All right. I hope that is all good, and feel free to use the chat if you have any questions whatsoever. Just pop me a message, and if any of you are Danish and feel best about writing to me in Danish, just do that. I will translate and answer you in English if that is okay. All right. Well, let's get to it then. I guess you all know my stock scanner, or at least have tried it before. If this is your first time, then you should feel free to go into mystockscanner.com and sign up. There's a 14 days free trial there. And we also have a paid version that is $35 normally per month. And we are trying to put as much value into that platform as possible. And as I mentioned, I'll talk to you a bit tonight about what we will get in here in the near future. We have a lot on the plate that we want to add to my stock scanner up towards summertime. So let's get straight into it. First of all, we have the portfolios, and if you're not that used to using, I should say right away, the reason why I'm not looking straight into the camera is I have my main screen just right here to the left of me. So if it seems like I'm a bit unattended, it's because I watch to the left here on my screen. If you're not that used to using my stock scanner, we have the portfolio button here where you can see all the portfolios, but you can also save the portfolios as favorites, and then they are just here, just as with your favorite screeners, your watch list, and so on. So we have three normal portfolios, you could say, that are automated, that are algo based. I talked about them in the webinars around New Year, just in the Christmas days there. We talked about the TPI Plus portfolio, the value momentum, and the value quality. I'll go through them today, and then we have the stock of the day. That is where I am using the platform to buy some stocks and put them in there. It's not as rule based or not as algo like as the others. This is more me trading, and on many requests in the beginning, stock of the day was just a mix between US stocks and Danish, Swedish, Norwegian stocks. But we have split them up in two. So we have stock of the day that is only US stocks, and then we have the stock of the day Nordic, which is, of course, Denmark, Sweden, and Norway. If we look at them first, as you can see here, it takes a bit of time thinking. It seems it might be because I'm online on Teams, on streaming at the same time here. But as you can see, our US portfolio started back here in the beginning of December, where the market really ran quickly upwards. We were up being about 100% invested here, but then that took a nosedive and we are just slowly building up the portfolio again now. And as you can see, we have a total year-to-date performance at 7.24%. And that is towards the market, the RSP. And to those of you that don't know the RSP, then it is basically just the S&P 500. However, the S&P 500 is what is called a weighted index. You might have heard this, that S&P 500 is mainly driven by 5 to 10 really, really big stocks. And that means when these 5 or 10 stocks are going up, then S&P 500 is going up. No matter if, it doesn't matter if a lot of the smaller stocks are going down, because these big stocks are lifting them up. So instead of using the SPY or the S&P 500 futures, we use the RSP, which is an equal weight ETF. That means that all the 500 stocks has the exact same weight in here. And as you can see, both of them have just been on a tear, completely ripping a face off a bull market here. It were up 28.3%, but with today's a bit sour market, we are down at quote unquote only 25.9%. That is still insanely good. And of course, it cannot last forever. We cannot have a big market in the US that goes up by 25% each quarter. That is, of course, not really sustainable. So at some point, we will see a little drop down. But that was just to say that this is the benchmark we are using. So as you can see here, we have a total return of 9.22%. The total return of the benchmark is 12.2, and that is because we started back in December here. But we have very low drawdowns, extremely low volatility, and all in all, I'm actually very pleased with this portfolio here. Of the other portfolios, if we look at them, we have this stock of the day Nordic. It hasn't been running for a long time, and there are not very many stocks in there. We can just have a quick. There are 4 stocks: Ambea, Camurus, Höegh Autoliners, and Sectra. By now, and there might be more coming in, but the market is a bit in the red right now, so I might just wait a tiny bit with that. But the summary, if we can get back to that, just go like this. As you can see, we have been running just since the last day in February. And since then, we have made 0.8%. We have only been around 10 to 20% invested right now, about 30% invested, have a max drawdown of only 0.73% and an extremely low volatility. Of course, mainly due to that, we haven't been that much invested. A nice sharp and everything looks good. As you can see, the blue here is a portfolio. It's just chugging along, and the market have had a bit of a downturn here. I should say that the market I'm using, the benchmark here, is the OMX N40, which is a bit like S&P 500 or the Copenhagen, the C25. This is just the 40 largest Nordic stocks. So it's not a perfect index. Again, it's very much weighted. So 2 or 3 of the stocks are actually heavily weighted in there, but it is the best we can get right now. So these two are, as I said, day to day. I can make changes one day or the other. And when we soon get an email notification system in there, then those of you that are paying customers, you can say that you would like an email notification whenever something happens in one of these portfolios. And then if I change something an evening or during the day, you'll get an email notification on your computer or on your phone, anywhere. And that is one of the features we are really looking forward to. All right. Then looking at the 3 automated portfolios, they have really been on a tear this year. We started them on the 1st of January, and we introduced them in the webinars in late 2023 in the Christmas New Year days there. And we were, of course, a bit, I wouldn't say nervous, but we were excited and very interested in seeing how these portfolios would do live. because we told you all the rules in the webinars, and the TPI Plus portfolio is looking for low TPI and good earnings quality. And if we're looking at that, very simple rules, and we are only reallocating once per month. So those of you that are paying customers, you've had your spreadsheet. Liam sent the spreadsheet to you where you can punch in how much money you have in your portfolio, how large a percentage you will allocate to each of these portfolios. And yeah, that is it. It wasn't there one more. Just a second. Value, quality, value, momentum, and then of course a quality momentum. Okay, I haven't gotten that in my favorite. I have now. Sorry, here we go. There are four, and you can in this spreadsheet portfolio mixer you have received. You're getting that on the first of every month if you haven't seen it, and you can put in if you want 25% to each of the portfolios or however you want to mix it, and then it shows you what you should buy with how much money, how many of each stock, and so on and so forth. I just made a couple of small instructional videos for that today. I think Liam got to send it out. Otherwise, he'll do it tomorrow when he's back from the doctor. So let's have a look at the different portfolios. We can choose the one up here first, quality and momentum. So we're looking for high quality stock with a high degree of momentum. So looking at that, as you can see the blue here, since the 1st of January, we have done 8.46% versus the 6.7% in the index here. You can argue if we should use SPY, the normal S&P 500, but we think this is a more fair and more honest index. So right now we are beating that index for the first quarter. I don't know if you have seen it, but Liam have made some graphical changes to the portfolio area here. Before there was a drop down menu, and you should choose between monthly return and quarterlies and all that stuff down here. But right now you can see it all in one. You can see the performance out here. You can see the monthly returns, as you can see 1%, 3.8, 3.2, and 0.3% here. This is of course April, so that was only from yesterday we have here. We don't have that with live update. We have an 8.2% in the first quarter and 0.3% in Q1. So that is extremely satisfying. And you can see they are fairly split out on technology, industrials, and so on. And well, over time, we will start to populate this window here as well. So we get different years and so on. But I think this gives us a very good picture of a strategy that is performing extremely well here in the beginning of the year. Let's have a look at the other ones. We have the TPI Plus. That is the only one of these that is using our proprietary TPI indicator, where it's looking on an oversold on the daily TPI and then some earnings quality as well. This one has done 10.66% this year, and that is from allocating 1st of January, 1st of February, 1st of March, and then again yesterday, 1st of April. So it is not like you are being completely overloaded with work, just reallocating once per month here. And as you saw in the webinars around New Year, these have back tested some extremely good performances as well. So 10.66%, if we keep that up, we'll make 47% for the year. As you can see, there's a bit of a higher drawdown than the overall market, a bit more volatility, but some very decent sharp. I should say that these are good strategies. We are very confident in these strategies. However, we are in a market looking like this, and in a market like this, most strategies will actually look good. I'm not saying that to some sort of talk our own strategies down, because we can see in the backtest they're good. However, you should not expect 10% or 12% per quarter. That would be a bit of an overkill to claim that. But we are happy with this beginning of the year, and that we have actually beaten the market with an extra 50% on top of the 7% it went up so far this year. So extremely satisfying, some very good months here. All right, on to the next one. We have the value momentum. And as you might recall from the webinar, this is actually not one where we are going for high value and high momentum. It's one where we are going with low value and high momentum. So that is a bit of a tricky thing, but you can see it here in the overall value score that all of the stocks in here actually have some very poor value measured in price earning, price to sale, and so on, EV to EBITDA, and how we are measuring it. However, the momentum is very good, and these are the kind of stocks that have been doing very good this year. Not necessarily fantastic, well-earning companies, but companies that are just tearing the market apart. And as you can see here, 12% this year, crushing the market, almost double the market here. Also having some more drawdown, having a significantly more volatility. So that often comes in conjunction with higher volatility. You can get higher performance and the other way around. But as you can see, some very satisfying months here. Some very heavy on technology, and that is not a big surprise since we are looking for low value, high momentum, and these tech stocks are the ones that have been killing it this year, especially with the expectancy of a Fed lowering interest rates. Now, we just saw this evening there were some Fed speeches out saying that they still believe the rate cuts this year is within reach, and that will definitely give this technology a boost. Well, not so much today, but there are some interest rates going up, and we also see one of the former Magnificent Seven stocks that is not doing quite so well. Tesla came out with some terrible numbers on their sales numbers. They are being killed by BYD. So, but that is another story. The value momentum, 12%. That is absolutely fantastic. Last of the portfolios is the value quality down here. And that one has been lagging a bit from the others. But I must say March it really hit a home run in March. 8.5% in just 1 month here. That is completely crazy. Then it is a bit down this year. That was only yesterday. As you can see, a nicely diversified with consumer, defensive, cyclicals, healthcare, and so on, and actually not much technology here. But it has gained a lot, 11.2% here, with some quite low volatility actually compared to the others. And also you can see the drawdown was in the beginning here. We do want to see a good combination of these different strategies where they have their drawdowns at different times, so they are complementing each other. And this one is really doing the thing that we want it to do. So these are the portfolios in the last part today. For the paying members, we can go a bit more in depth with the different positions if you want to, but let's keep it at this so far. All right. Well, let's talk about some of the new stuff that have been put into the system here. Let's just pick a stock, and we can pick a Danish stock like Novo Nordisk. Kind of the only reason why we have a positive GDP number in Denmark right now. As you can see, there have been a bit of moving around on different parts here, and that is partially because Liam has done a fantastic job of making this look good on basically all platforms. I know there are still a couple of strange setups with strange screen different resolutions, but most screens on normal smartphones, on iPads, different tablets, different normal screen sizes, so on and so forth, you should be able to see it quite well by now. If you have any trouble with it, if you have a screen where this looks completely strange, then feel free to write us either per mail. You can also go in here, as always. There's a question and feedback button here, and you can write us directly, and we will make sure that we answer you as quickly as possible. Anyway, we still have our stock scores up here. We've got the TPI status here, which I'm very happy to have in here. Also, some important dates: the next reporting date, how many days there are to that, when it is on the day that is before open, and then for some reason we don't have the next ex dividend date. I think they are paying a dividend, aren't they? Ah, okay, but we don't have it for this one. Then we have the growth value and so on here. However, we have this little radio button up here where we can choose advanced. And it has been there for a while, but it is so now that this one is separated from, for instance, the valuation chart. So even though I choose advanced here now, it will still be in the normal mode here. So you can choose that separately between these two. And that has been a wish from many of you. And as I hope you have realized, many of the new features, enhancements, everything on the platform that we do here is actually on your requests, from your inspiration, your ideas, and so on. Of course, we have a long list of stuff we want to put in there, and I'll come back to that in a second. But many of the small features, there was a couple of the ideas yesterday in the Danish webinar, and Liam, he's already programming it in right now. So we're really trying to take as many of your good ideas and inspirational things and put it in here as quickly as possible, because it is normally some very good stuff, because you're sitting there working with it on a day-to-day basis and experiencing you're lacking something in the platform, writing us, and if we can, we'll put it in right away. Anyway, choosing the advanced rating button here, you can see we get some more. We get the PEG ratio. We get some more data down here. If you don't know the PEG ratio, it's actually one of the ratios I'm very fond of. That is where you're taking the PE ratio and dividing it by the estimated future growth in percentages. Because normally when we're looking at PE ratio, sometimes we can look at a stock and think, no, that is too expensive. I'm simply not paying 30 or 40 or 50 or 100 in price earning for a stock. But if the company is growing its earnings per share by 50 or 80% per year, then the money you pay for stock right now will quickly, you can see the real price earning you're actually paying will shrink next year and next year and next year, because the company growth at such a high speed. So the PEG ratio below 2 or below 3, whatever you choose, is actually showing that you're not paying too much for future growth. If the PEG ratio starts to be 5 or 10 or something like that, you really need to dive a bit into the numbers and see why that is, because that might be a deal killer for me. Anyway, on the advanced part here, we get a lot of the dividend parts. I think we haven't got the dividend estimates. Not sure why we don't have the next dividend date, but that is something I'll have a look into. Anyway, I think Liam has done a great job of making this new design here, and that is one of the things that I would mention today that is made here. All right, as I said, the chart he also changed this with the advanced and normal button here, so that when we go into valuation, you can see that we can choose the advanced or not. I personally normally start here with the non-advanced, because I really like this new one with a bull case and a base case and a bear case and so on. But I like starting here, and I also like I like starting without the risk-free interest rate, because it just clutter up the screens a bit for me. But I like to put it on later on, because it shows if the investment I am looking at, the company I'm looking at, if that is actually outperforming a risk-free interest rate. It ought to, you could say. So if you're buying into a company and it only barely beats the risk-free interest rate. Let's say you could get 5% on a bond right now, for instance, and you are putting your money into a very risky company. I'm not saying Novo Nordisk is a very risky company, but let's say you put it into a very risky growth company, and you could say see from the projections that you're only getting something like 7 or 8% per year in potential return, then you might consider if this is the right thing, because 8% sounds great, but you should always compare it to this sunken cost, this performance that you are not getting, but you could get from a bond, for instance. So anyway, looking at Novo Nordisk here, for those of you that haven't looked at this before, well, we can just try and make the, let's see if I can put right in here. We have the analyst case, the other one here, and then we have the base case. That is what we start out with. And I do like to start that out with the same projections, the earnings per share estimates that the analysts are saying, because those analysts, this is an average of all the analysts. And for a big company like Novo, there are a lot of analysts. We can just have a look here in the summary. Down here on the bottom, we have analysts. We actually don't have a number of analysts here, but normally in a big company like this, it's 20 or 30 or something like that. Could it be even more? So I like to start with the same numbers as the analyst. Then we can see that the multiple, the price multiple, PE here, the analysts they might not have defined this as 31.45 on average, but they have defined a price target, and they have defined what they think the company will earn. And from that, we can deduct the price earning they are expecting for Novo Nordisk. And you can say 31.45, is that high, is that low? Well, that depends. Some of the things we are putting into the system shortly is something where you can compare a company like Novo Nordisk. It has a sector. It's a part of a sector, in this case, healthcare, and then it's a part of an industry group called biotechnology and medical research. Healthcare is the big umbrella, and then under healthcare there are a lot of small industry groups, or smaller industry groups, and this one, biotechnology, is one of them. So what you will be able to see shortly is, for instance, the average price earning for the entire sector, the industry group, and so on. But we can have a look at, for instance, the historical price earnings of the company. And what can we see? Well, the last 20 years, the average price earning have been 24. But 20 years back, they didn't have the Wegovy and Ozempic, or what's called, all of these products. The last 10 years, 27 on average. 10 years still might be a bit of a long time back, but 5 years, that starts to make sense here. 3 years, 37, and current is almost 50. Sometimes, well, if you know some of the competitors, it could be Eli Lilly. You can have a look at them. They are producing some insulin. They are working on a weight control drug as well. And you can see their price earning right now is actually absolutely insane. 131, and expected 12-month forecast, they're almost 65. So knowing that, we might have the thought that, if we're looking at the value chart here, that 39 or 32 might actually be just reasonable. Another way you can have a look at this is you can, let me see, we're only looking 4 years back right now. We can have a look at the black price chart here, and then we can have a look at our base case here, the price earning, because what we can try and do is we can try and find a fit where this blue line fits the black price line best possible. And as you can see, if I go down to 32, there's not really any time over the last 2 or 3 years where the price have been traded at a price earning equal to that. So we can try and up the price earning a bit. You could see the blue line going up here. And when we get to a point where we are saying, okay, it actually fits this line fairly evenly now over the last 2 or 3 years, then you might have a reasonable price earning. Then, of course, a lot of things can happen in the future. Maybe Eli Lilly or some of the others are coming out with a Wegovy killer, just some sort of product that really can compete with the weight control drug from Novo Nordisk. It could also be that Novo Nordisk comes out with some massive new drug that really beats it all, so the price earning goes up. Anyway, 37 doesn't seem like too much in my opinion. When we look at 130 something with the Eli Lilly right now. But let's just try and stick with 37. That means that from the current price, if we just listen to the analyst, they think that that Novo Nordisk, there's basically no upside for that the next 2 years. Well, here, if we think they can trade at a bigger price earning and we still keep the earnings per share estimate, then there should be a 20% upside here. It could also be that you're sitting there, maybe you know something, maybe you are a specialist in pharmaceutical companies, and you say, well, no, they can go up, they can grow their earnings by 40% the next 2 years without any problems, and I think they can keep their price earning at 37. Well, then there's a 54% upside over the next couple of years. Then, of course, we could become completely ridiculous and say, what if they were trading at a price earning at 130, just like Eli Lilly? Well, then there was some extra upside here with 133% per year. However, you get the point. We can play around with these numbers quite a lot. And what Liam and I have found is that, of course, it's important how much they make, but the really big driver is actually what price earning the investors are willing to pay for it. We have seen that with the Tesla case, where we did our analysis last year, way back in the summer, and said, well, honestly, guys, and we took a lot of heat from that from a lot of Tesla fans. But we said, honestly, this stock might just be a $100 stock or an $80 stock. And if we are looking at it now, it is plummeting quite quickly. And it was not because we were prophetic in any way or had a crystal ball. We simply just took the numbers that analysts were looking at and expecting. And then we looked at the price earning and said, nah, that it might just go quite a lot lower. There's a ton of competition coming in. Honda, Hyundai, Toyota, they are just pouring in. Volkswagen, they might not be exactly as good as Tesla yet, but they are really making the effort to get there. And we can see the Chinese BYD, they are about to surpass them. The Chinese are beating, I think, Tesla. So this might end up being a $100 stock, as we talked about last year. But the only thing we used for this was actually the value graph. So these are some of the new features. You can see the base and analyst things are coming out here. If we're choosing advanced, all of a sudden we have a bull case, we have a base case and a bear case, and you can put in different numbers there. So you're saying, okay, we have a base case. It might be as where the analysts are saying. And then you can say, okay, we could also have a bull case with 50% growth per year and a massive higher price earning. Okay, where does that bring us? And then we can see where that takes us. So I hope you like the new design here in the value graph. I'm using it a lot. Personally, I have gotten to the point where I do not buy a new stock without just have consulted this this value chart before to see if I'm paying too much for this. All right. What else are we? Let's see, value chart. Yes. All right. Let's get to some of the new stuff then. What are we brewing on? What is coming into the platform in the next couple of months? Well, just in next week, probably, maybe this week, we are having our course area ready. We've talked about this for a while, and I am making the first course modules right now. The first courses that will be in there, some will be completely free, some will be for paying members only. But the first modules that will be in there will be from our 3-point playbook. If you have seen my videos, you know the drill. When we look at a new stock, we try to figure out, is it a good and solid company? Are they making money? The next point, the next question we ask ourselves is it fairly valued? That is what we figure out here with the value graph. And then the last one is the TPI. Is it now we should buy the stock? And if you have seen my videos from a couple of days ago, I'm showing some different variations on how to use the TPI chart here with long-term TPI, weekly and daily TPI. So that is the first course modules that will be coming in. We'll also go more in depth with a lot of the fundamentals, like what is price earning, how is it calculated, how can we use it, what about PEG ratio, price to sale, all of these fancy things that you hear in the financial media. We will pick them apart and describe them, talk about how you can use them in your day-to-day investments. So we're looking very much forward to that. Also, for those of you speaking Danish, I am doing well, we're not doing it right now, but I'm preparing a huge option trading course. It might be translated to English at some point, I'm not sure, but we're starting it out here in the beginning of June, and it's running probably 4 months, where we are having a ton of live webinars and recorded modules and a lot of homework and maybe some live meetups and so on. So that is going to be quite fantastic, and all the course modules are going to be in here in Mystockscanner. Actually, if you are paying up for the option course, that is about 100. It'll probably end up at about $150 a month for these months. Then in that price, you're also getting Mystockscanner worth of $35. So if you're already a paying customer, of course, we will deduct that from the price. So that is a course module. Of other things that are coming, we are not entirely certain of the ranking on the to-do list here. There will be some email notifications so that you can go in and say, I want an email notification when a certain stock in my portfolio is dropping below 70 in stock score or whatever. There'll be a ton of different things you can put alerts on. You can also to set in and subscribe for notifications if a portfolio you're following, let's say the stock of the day Nordic, if changes are happening there, then you get a notification. So that part is something a lot of people have requested, and that is coming up. Then something that we're looking forward to very much too is let's just have a quick look back at Novo Nordisk. We are going to do a lot of work on dividends. I know many of you are very interested in dividends, and there are going to be some information pages on here about how much dividend they are paying, what the history of the dividends, how secure that dividend is, are they making enough money for that dividend, and so on. So dividends will be a part of it. Another thing I'm looking very much forward to is that we are putting all of the indices in there, meaning basically all indices we can find in the world, or at least we can subscribe to. Let's say the Danish C25 or the British FTSE 100, something like that. You can go in there and you can have a look at, for instance, the Danish index C25, the largest 25 stocks, and you can have a look at the average price earning score, the average value quality momentum score for the different countries. You can compare them. We are also diving down into it and saying, okay, then we have, let's say, the S&P 500 stocks. What are their average scores here? Then you can go down into sectors and see, okay, what sectors have the best value? What sectors have the best momentum? How are they moving? And you can dive even deeper down into industry groups and get all of this information, the average per price earning and so on and so forth, the growth in profit and so on. So you can try and find good industry groups and good sectors just from this alone. So that one is going to be a real killer, I think. One more thing that I really look forward to is that we are planning on making a what you can call a TradingView Lite. Those of you that have seen my videos, you know that I love to use TradingView. Many of you are doing as well. However, if you're using it a lot, and if you have been using the free version, you also know that they have put a lot of restrictions on how many indicators, how many watch lists, how many stocks can you put in a watch list, and so on and so forth. And what we are planning on doing is basically making all of this available within Mystockscanner. We're not going to have all the features of TradingView. There is a million different things you can do in TradingView. You can program your own indicators. You can communicate with other users. You can put up ideas and all sort of stuff. But what we are going to have in Mystockscanner is the charting module, where you can see in the beginning it will be end of day data, but later on soon it will be live, but with 15-minute delays on the data set. We're not really targeting day traders, so it's not going to be completely 100% live, but with 15 minutes delay. There it will be able for you to draw lines on. It will be able for you to put alert lines on, so you can get a notification when something is happening. You can even put on this alert line and say, I want an email notification if this line is broken. That could be a good selling point or a good buying point or whatever. And then you get an email notification saying, be aware something is happening in Tesla or whatever stock you're looking at. So I hope that makes sense. So by summertime, and I've learned from experience, we shouldn't set an exact date on, but we have the entire April, May, and June now. So in the next 3 months, most of these topics should be covered. Let me see something. If you're not sure what order implement, feel free to send out a poll. Yes, so we actually talked about that, putting out a poll, just simply asking you, what do you think? We might do that. There's a bit of some of it is also on Liam's shoulders, because he has to build it in the right order. So it might be that he gets to decide some of it. But there might be a poll coming out to you, and that would be nice to see what you think was the most important stuff to get in there. But as I said, that is what we hope to have done in the next 3, maybe 4 months. We're not planning on having too much summer holiday this year anyway. And I am starting my option program anyway on just around the 1st of June. So that will take up most of my time in the summer, I guess. All right. Let's see. Did I get around all my notes here? We had the portfolio, the value chart, the changes, 3-point playbook, options, dividend index, sectors, and charts. I think that is about it. Does any of you have any questions, any comments on any of this, on the software, on any of the developments, on questions for things we have touched on tonight, or just general things you are experiencing in your normal day-to-day? I hope that if you are having some problems, that you can contact us anytime. We are trying to get back to you within very short while, often within an hour, and sometimes we can have stuff fixed just immediately. If any of you have any requests, any problems you are running into. Also, I don't know if you have seen that in the emails we have sent out, but all of the paying users, you can just write us and say that you want a one-on-one with either me or Liam. Most of the users right now are Danish, so they want a one-on-one with me. Where we can go through the platform and so on. It's not as much a one-on-one where we go through your portfolio, because I'm not a financial advisor in any way, shape, or form. So it's not like I can sit there and advise you on any stocks. However, we can go through and look at some of your stocks, and I can tell you how Mystockscanner can be used to look at these different stocks and what you could look for. So feel free to use that one-on-one opportunity. It normally takes, I don't know, somewhere between 45 minutes, an hour, sometimes an hour and 15 minutes. We're not counting really, but it's just to make sure that you get this really good into a good structure, a good routine when you're looking at your investments. All right. There are not really any questions popping up here as far as I can tell. Sometimes there's a bit of a delay on it, so let me know if there is anything. Otherwise, just in a second, I will close down for the Facebook feed, and we will just go on for, I don't know, yesterday was about half an hour or so with some back and forth, a bit of questions, looking at specific stocks and so on. We'll do that with those of you that are paying members. So if we don't have any questions, doesn't seem like it, then I will thank you very much, those of you that have been following us on Facebook. I hope that you'll consider coming in as a paying subscriber as well, but that is, of course, entirely up to you. We are trying to add as much value to this as possible at all, so that people will think it's good value. But as always, come up with good ideas if you think something should be added before it was the right value for you. All right.